George Gilder claims that regenerative medicine is about to be worth tens of billions, and one tiny stock is going to soar tenfold as a result. Gilder wants $399 to reveal this stock, but he left enough clues in the public presentation to figure out the stock. I reveal it in this video for free, and if you appreciate me doing this, just drop a like and subscribe. Also, no paid or proprietary info is given away in this video. It's all guesswork based on publicly available presentations. Before we do anything, let's look at past stock picks Gilder has made to see how good he is. Back in April 2020, Gilder recommended 8 different small-cap stocks. The first was Inseego, and this stock has performed horribly, basically losing all of its value. The next stock was Seva, and it doubled in value after being recommended. However, if you didn't sell at that time, the stock fell and has only recently returned to break-even levels 5 years later. Next was A10 Networks, and this stock has done very well. It's up around 175% since being recommended. The fourth stock recommended was Cloudflare. This stock has fluctuated but was up 10 times at one point within 18 months of being recommended. Impinj was the fifth stock recommended, and it was another strong performer. At its peak, it was up over 1,000%, and if you're still holding 5 years later, you're still up several 100%. The sixth stock was Allot, and if you timed it right, you could have doubled your money. However, it's hard to sell at the perfect time. If you didn't sell at the right moment, you would have lost a lot of money. The seventh stock was QuickLogic, and it was another good one. It has fluctuated, but it has pretty much always remained at least double the price George recommended it at. The last stock was MyTech, and whether it was a good pick depends on whether you sold at the right time. You could have doubled your money, but if you held past the peak, you likely lost money. Let's shift back to this teaser from Gilder and try to figure out the stock now. Here's how Gilder starts the presentation. He says, look at the picture to the right. Imagine a simple injection that completely rejuvenates someone's cartilage in their knees, shoulders, back, and hips, and gives them the heart function of someone in their 30s. George continues and says, these emerging technologies known as regenerative medicine or the new you revolution. And Gilder says, it's a massive $59 billion market, creating a once-in-a-lifetime opportunity for early investors in the right companies who could see shares soar up to 10 times higher. Later in the presentation, Gilder says this, I'm currently researching 3 regenerative medicine companies that could revolutionize health and healing. But according to my research, only one is poised to lead the pack at this time. And the company I'm talking about has the potential to see its shares grow up to 10 times higher than today's price. And Gilder is so excited about regenerative medicine because he claims millions of patients in the US alone are in need of regenerative medicine treatments. And apparently some experts believe approximately 1 in every 3 Americans could potentially benefit from regenerative medicine. And regenerative medicines are already being used worldwide. However, there's one big reason why regenerative medicine isn't big yet, and it's cost. However, George claims the company he's pitching fixes this. He says, however, there is one big, expensive obstacle to the mass marketing of regenerative medicine technologies, which has a simple, cost-effective solution. And the company I'm talking about has the answer. George explains this more in depth and says, so handling and shipping genes is even more expensive and even more complicated. Furthermore, when working with living genes, everything must be as sterile as possible. But living genes themselves can't be sterilized. The high temperatures of a sterilizer would kill them. So the whole process must be conducted in a clean room, costing millions of dollars to create and maintain. Even worse, inserting genes into a cell is like an extreme form of microsurgery, hard to do and something that can easily go wrong. Bottom line, while many new you treatments are already here, at the moment each local medical center is forced to engineer its own applications for using them. That means these facilities are forced to reinvent the wheel. And George continues by saying, thankfully, the solution I'm about to reveal aims to solve each problem above and dramatically accelerates the time to market for many new regenerative new you medicine treatments, mostly by creating standardized procedures throughout medical facilities around the globe. Standardization could make many complex medical treatments as simple as picking out a treatment recipe, and creating it with uniform manufacturing techniques, which makes new therapies available much faster and far less expensive. The company Gilder recommends makes prefabricated buildings that can be installed for cheap at hospitals that regenerative therapies can be performed in. Here's how George explains what they do. For starters, these new U labs are built and then shipped almost as easily as a container on a tractor-trailer truck. They are like prefabricated buildings, relatively easy to build from standardized models, and available with additional options, and delivered, then set up at a hospital or clinic. That means cookie-cutter lab models that can be mass-produced, made from a standard blueprint, which is like a design schematic for standardizing new U labs, stocking them with standardized equipment, and even supplying standardized protocols for treatments these labs will produce. In other words, this means massive savings are possible from the standardization of treatment labs, methods, and therapies, as well as instruments, procedures, or software. I'm going to reveal my guess for the stock in about 20 seconds, but before I do that, I want to remind you to click the link in the description to check out Alpha Picks. I reviewed over 100 stock picking services, and Alpha Picks performs the best and actually beats the market easily. If you click the link in the description, you get $50 off Alpha Picks. So go ahead and click that link and take advantage of this amazing deal. Based on the clues left in the presentation, it's clear the stock being pitched here is Orgenesis, and the ticker is ORGS. Orgenesis is a global biotech company specializing in cell and gene therapy, focusing on developing and manufacturing personalized treatments. The company operates through its point-of-care platform, which aims to decentralize and streamline the production of cell and gene therapies, making them more accessible and cost-effective for patients worldwide. Orgenesis collaborates with hospitals, research institutions, and biotech companies to develop innovative therapies targeting various diseases, including cancer, autoimmune disorders, and rare genetic conditions. Here's what you should know about this stock, and after I'll tell you if I'd buy. First is Regenerative Medicine Goldmine, a $399 billion market up for grabs. Orgenesis is playing in the massive regenerative medicine space, projected to hit $399 billion, and their tech could make them a breakout star if it takes off. With a focus on cell and gene therapies, they're aiming to revolutionize healthcare. Huge upside if they nail it. Second is Patent Powerhouse. 17 patents and 30-plus therapies in the works. This isn't some fly-by-night operation. Orgenesis has a solid pipeline with 17 patents and over 30 therapies in development, including cool stuff like nanotech for cancer detection. That's a lot of innovation fuel, but it's only worth something if they can bring it to market. Third is Cash Crunch Crisis. $200,000 versus $7 million in debt. Here's the scary part. Orgenesis is strapped for cash, with just $200,000 in the bank against $7 million in short-term debt as of recent reports. That's a tightrope walk, and they'll need more funding fast to keep the lights on. Fourth is Decentralized Dream. Genius or gimmick? Their big pitch is a decentralized model for cell and gene therapies, which could cut costs and speed up delivery. Super innovative. But they're up against giants like Vertex and scrappy startups like NanoExplore, so execution is everything. Fifth is Regulatory Roller Coaster. Will they survive the FDA gauntlet? Biotech's a tough game, and Orgenesis faces a long, uncertain road of clinical trials and regulatory approvals. One delay or rejection could tank the stock, so this is high-risk, high-reward territory. Sixth, $5 million lifeline. Fresh cash, but is it enough? They recently scored a $5 million equity line from Williamsburg Venture Holdings, with $750,000 up front, and more to draw over 24 months. It's a lifeline, but with their cash burn and debt, investors need to ask, will it hold them over long enough to turn a profit? I have a lot of concerns about this company and personally wouldn't buy. First and foremost, the company operates in the highly speculative biotech sector, where many companies struggle to achieve profitability. Orgenesis focuses on cell and gene therapy manufacturing, which is an innovative space but also one that requires substantial capital investment and long development timelines. Given the nature of the industry, success is not guaranteed, and many biotech firms fail before they can commercialize their technologies. Another concern is Orgenesis's financial health. The company has a history of reporting losses, and its financials indicate ongoing cash burn without consistent revenue growth. A lack of profitability raises red flags about sustainability, as continued funding through debt or equity dilution could negatively impact shareholders. If the company cannot secure strong revenue streams or partnerships to fund its operations, it may struggle to stay afloat. Additionally, competition in the biotech and cell therapy industry is fierce, with much larger, well-capitalized players dominating the space. Orgenesis must prove that its decentralized approach to manufacturing can scale effectively and offer a clear advantage over traditional centralized models. If the company fails to differentiate itself or struggles with regulatory hurdles, its business model may not gain enough traction. Finally, market sentiment around small-cap biotech stocks is volatile, making Orgenesis a risky bet. Without a clear pathway to profitability, strong clinical results, or major partnerships, I see more downside risk than upside potential. Given these uncertainties, I would avoid investing in Orgenesis stock at this time. And make sure to click the link in the description to check out Alpha Picks. This is the best stock picking service, and clicking the link saves you $50 on this awesome service. So go ahead and check out Alpha Picks now and put yourself in the best position to win with stocks.